Trade talks between the U.S. and China extending into a second day as Commerce Secretary Howard Lutnick says the talks are going well. President Trump also expressing support.
We are doing well with China. China's not easy. I think we're doing very well. They're over there now. I'm only getting good reports. We want to open up China. It'll be a great thing for China, a great thing for the rest of the world.
Top issues of the talks include U.S. technology export controls and China's supply of rare earth minerals. Joining us now on this, Shehzad Qazi. He is China Beige Book's International Managing Director. Shehzad, it's always great to speak with you and get your insights on U.S.-China relations here. Do these talks really just come down to a simple trade of chips for rare earths? And if so, where do we see them kind of wrapping up?
Yeah, I mean, the bottom line is that China wants access to as advanced chips as possible. And we, of course, are heavily dependent on their rare earth exports, and we need access to those. Our car companies need access to those yesterday. But that's where a lot of complication builds into it, because while it's becoming very clear that there's going to be some kind of walk back on export controls by the Trump administration, we really can't be in a position of giving away too much. I think even what's happening right now politically is going to, I think, soon enough become a liability in D.C. For the president.
You know, Shehzad, as we continue to think about the president and the optics of a deal that this administration has clearly tried to make sure that they have surrounding them, whether that be with what came with US-UK at a time where there were heightened concerns already about some of the other trade deals netting out and needing to show a win in some part of the world, even though those talks were basically formulating for years at this point in time. How much of the US-China trade talks could actually just look like what netted out in 2020?
Yeah, look, there isn't, I think, a big deal that is still on the table. I think even mini deals, which I personally was much more bullish about, are increasingly looking very difficult to achieve, as you can see from the fact that they've had to do this meeting out of nowhere in London because the Geneva talks clearly did not yield the kind of results on the US side, at least, that we wanted them to. So I think with China, we have got this ongoing process where it's going to take a long time to hammer out any kind of understanding on the such exchanges moving forward. So I think you might get a little bit of a truce again. Markets may get a little bit of a breathing room, but I would continue to bet on long-term volatility in the relationship. Let's not forget, we are barely at the 6-month mark of the Trump administration. We've got a lot more time to go here. So I think far more volatility ahead.
And of course, last time around, it took the U.S. and China about 18 months to reach an agreement. But we do have a shorter term deadline, which is Treasury Secretary Scott Bessent's requirement to head back to the U.S. because he'll be on Capitol Hill tomorrow for a hearing. Do you think that that speeds up any sort of short term, tiny agreement trickling out of these talks this time around?
There's, they could potentially walk away with some kind of very tactical deal or agreement, or an understanding. Really, formulating this understanding is what's key here, right? They want to formalize the understandings. Okay, so they could get that done. But in a couple of months here, in a few months here, could we go back to where we are today? We absolutely could. So I think this is a very shaky truce at best if it can be achieved. And the Secretary of Treasury could come back and the talks will still potentially keep on going on. I don't think that our deadline is necessarily what's driving the ongoing conversation.
You know, Shehzad, as we think about some of the moves that were recently made, one of them notably by China yesterday in raising the minimum wage, and I know that this is kind of region by region within China, how are you kind of looking through some of those moves and saying, okay, that's not necessarily a tariff, but it is an increasing of the costs, input costs for production that U.S. companies that do engage in the region and rely on it for production are also going to have to consider?
Chinese production is so heavily subsidized for so many complicated reasons that wage gains, even if these wage increases take place and what they look like and what the phase-in, et cetera, for all of them is, I'm not necessarily sure that it has a massive cost impact up front, because it may very well be offset by a lot of the freebies that the Chinese manufacturing sector has long been used to.
Is any sign of stimulus for the Chinese consumer digestible as a headwind to trade talks? Like, if we continue to hear news of anything that helps Chinese consumers coming from Beijing officials, does that signal to you that China is trying to move away from needing to rely on the U.S. for any sort of support for its economy?
We saw quite a lot of evidence of stimulus in our May data that went out. But here's the thing, it's traditional stimulus. It's borrowing that's being directed towards companies. It's cheap interest rates that's being directed towards companies. It is a monetary policy levers being applied for your infrastructure development side of the economy. So it is continuing to support the supply side more than anything else. And I don't foresee that changing. Beijing is very comfortable with stimulating the supply side. They don't really, I think, even know how to stimulate the demand side, and they're very allergic to doing anything there.
Shehzad, good to see you here this morning. Thanks so much for breaking down what we're all tracking very closely. We know you are too on the U.S.-China trade front.